and welcome to PwC Nigeria's maiden edition of its monthly tax podcast series, which we have called PwC Tax Recap Series. On this podcast, we will be going through significant happenings in the tax world for the past month. Taxes may not be everyone's favorite topic, but they surely affect our lives in pretty much every aspect. With the decline in the earnings from oil, we've seen the Nigerian government shift its focus towards the tax space a lot more to shore up its revenue. My name is Ochuwa Alegeh, and I am joined by Kenneth Erikume, partner and lead tax reporting and strategy for PwC Nigeria. He is also the chief operating partner at PwC Nigeria. So welcome, Kenneth.
Thanks, Ochuwa. It's my pleasure to be here.
Thank you so much. Today, we'll be looking at three major hot topics. First of all, will be the Finance Act 2023, which has finally come into effect. And we'll also be talking about the joint audit framework between the Federal Inland Revenue Service and the Lagos State Inland Revenue Service. And lastly, we're going to be looking at what's going on in the courts, a judgment that was recently issued by the Federal High Court. And yeah, so let's dive right into our topics.
Sure.
Okay, so now that the Finance Act 2023 has finally, come into effect, what are the key changes and issues that you think taxpayers should be paying attention to?
Right. So I think the first issue that every Nigerian company should be familiar with is the increase of the tertiary education tax rate from 2.5% to 3%. Then companies that are appointed as agents to collect VAT on behalf of the FRS would now be required to remit their VAT on the 14th. There's also the deletion of the investment allowance, which was an uplift on companies when they invest in capital expenditure. That 10% has been removed, as well as the one, in the rural areas. The capital allowance restriction has also been relaxed for some companies, especially in the midstream and upstream sector of the gas economy. And then capital gains tax on disposal of digital assets, including the likes of, cryptocurrency, Bitcoin and others, has now been specifically introduced. And then there are stiff penalties for PPT and oil and gas companies. I think one final one that's also important, in the Finance Act 2019, interest in land and buildings was excluded from VAT. And that the definition of land and buildings also covered fixtures to land that were not essentially buildings. And that exemption has now been removed in the Finance Act 2023. So they're now VATable.
All right. Thank you so much. I suppose taxpayers really need to pay attention to these changes and how they're going to impact our lives over the next few years. I think one key question that's on everyone's mind is, when is this act going to actually become effective, in the sense of what tax returns is the Finance Act 2023 going to start applying to?
So the tax authorities would like it to apply on tax returns that are filed after 1st of September, the tax returns that are due after 1st of September. However, there's a court judgment on, in the case between ArcuGas and the FRS, where it was decided that you cannot apply tax laws retrospectively. So based on that, one could challenge that position, by the way. There's also the issue of investment allowance for gas equipment, which somewhat has been deleted. But then there is another provision in the law that still grants gas companies the ability to claim investment allowance. But, the amendment sort of forgot, I don't know if it's intentional, a provision that sort of says that when you enjoy investment allowance, your capital allowance is the book value of what you claim capital allowances on reduces. So that could be something that could be contentious for companies that operate in the gas space. There would also be issues around how do you apply these changes from 1st of September. That the basis period for some companies would start from January to December. But if you say, the capital allowance restriction kicks in from 1st of September, would you then prorate your assessable profit? That's some complicated issues that companies need to think about.
Definitely. I guess we'll just have to wait and see how it all unfolds. So let's move on into our next key topic here. Very interesting, the JAIT. So like we mentioned earlier, there's been a joint audit framework set up between the FIRS and the LIRS. I think our question here really is, what do you think about this, and do you think it's going to be successful?
Yes, so there was one before where the FRS tried to carry out joint audits with different state tax authorities. Okay. That wasn't very successful in terms of the implementation. Now, the idea here is to harmonize the approach to investigations and audits being carried out by tax authorities. And I think from the perspective of companies, it would be quite useful because then they don't have to deal with multiple audits happening at different times. But there will be perceived concerns around the success since it was tried before and it didn't actually gain traction. I think one of the important things that will come through with all of this is some renewed risks around some areas, because the tax authorities, when the FRS comes, they're looking at corporate, but when the state tax authorities come, they're looking at payroll. Now you would have a situation where the tax authorities are able to look at the complete picture working with the FRS. And do not forget that the FRS also have some information coming through from the common reporting standards on bank accounts operated by Nigerian citizens in other jurisdictions. So those are some of the issues. The effectiveness of the framework will depend on how well the FRS and the LRS collaborate.
Work together,
There's one thing to plan, there's another thing about implementation.
Yeah, but generally you'd say it's a good thing.
I think it's a step in the right direction. I mean, in other jurisdictions, you just have one tax authority looking at the two, just for constitutional purposes. But here, I think they can get it right.
I'm excited to see how it all turns out when they start to scale up and include other states' tax authorities. All right, well, let's go into our final topic, which is the Federal High Court judgments, which is basically it upheld a TAT ruling in regards to foreign shipping companies that have earned other revenue apart from income from carrying people and goods out of Nigeria. So, like demurrage, commissions, and the likes, income in that sphere. What do you make of this, and do you think our law really supports this judgment?
Yeah, I think, before the amendment, I think sometime in 2021, where they brought a specific provision that said that income from non-freight income earned by foreign shipping companies will be taxed under the general section 9, for me, it was very clear, based on the literal interpretation of the law, that you couldn't tax a foreign shipping company other than from their income from carrying goods out of Nigeria. So when they amended that, they sort of brought in, the risk that those other income like detention and demurrage will then be taxed, if you have a permanent establishment. So I think that risk exists. But when you look at the treaties usually capture all the income or profits of a company engaged in shipping or air transportation. And the idea is that when they're earning all the so-called non-freight income, it's incidental to the international shipping income. So this judgment goes against international principles. If you look at the OECD model and the commentaries around that, it goes contrary to it. However, this is something we see consistently in judgments recently, that many times the literal interpretation and the best practices are ignored, in terms of giving those judgments. But we'll see how it pans out, if it will be appealed and how the justification will be made by the taxpayer.
Okay. So what would you say is the outlook for other foreign shipping companies within Nigeria at this time? Yeah,
so there's an increased focus on shipping companies. I mean, the tax authorities have written to, other than shipping lines who have, clear presence in the country, there would also be those vessel owners that are involved in voyages, that take goods across different jurisdictions, including Nigeria. So the tax authorities, I don't know where they got their data from, have written to some of these vessel owners, tanker owners to be specific, that take crude oil out of Nigeria, or LPG or LNG. So that's what we're seeing, more focus on foreign shippers. The other thing we saw in the Finance Act 2023 is that there's a new introduction that if you are involved in international shipping with Nigeria, you need to provide your tax clearance certificate for you to be able to get approval from any regulator. So that's a new one. But on the flip side, they've also introduced some simplified rules around not having to provide audited accounts. Now a director can just do a declaration, but as long as you provide invoices. And the other thing, for if you're a foreign shipping company and you're operating out of the SPV, or the vessel is owned by a company operating out of a company that has a country that has treaty with Nigeria, then you need to follow the process of getting the treaty relief from the Nigerian tax authorities on an annual basis. So those are some of the developments.
Okay, so that's all been very interesting, Kenneth. Thank you so much. You've given us so much to think about, and I think the conversation is definitely going to continue amongst our listeners and our viewers. So thank you for joining us, Kenneth, and thank you to you, our viewers and our listeners. Do you have any final words for us, Kenneth?
Yeah, I guess this is our first podcast.
Yeah.
I'm looking forward to more interesting podcasts and conversations. For more in-depth analysis on some of these issues, you can actually go to our website.
Yes,
and we also have an application called Tax 24/7, where tax news is actually put out on a daily basis. So these are interesting channels to keep yourself up to date.
Okay. Once again, I am Ochuwa Alegeh, and this has been the PwC Tax Recap.